Hey guys, welcome everyone. So, good evening, ladies and gentlemen. The reason I'm saying good evening here is that I am doing this webinar from Dubai. The time now in Dubai is 6:02 p.m. So, welcome, ladies and gentlemen. We're having a very amazing topic for the day, financial modeling best practices. So, before we get started, let me introduce myself to you. So I'll be your host for the day. My name is Mohammed Al-Nabisiya. I am a financial trainer and financial modeler for Kaplan Professional Middle East. I have around like 9 to 10 years of experience in the area of financial accounting, financial analysis, and training. And for anyone, guys, I think plenty of you are already familiar with the name Kaplan, but anyone who is not quite familiar with the name Kaplan, let me start by giving a very small introduction about Kaplan. Kaplan is a part of the International Kaplan Incorporation. We are a leader in the training we give like end-to-end training solutions for professional qualification programs, leadership, behavioral, and professional development programs. And we are in the business for more than let's say 85 years. So welcome one more time to the webinar, guys. We're having a very hot topic for the day, financial modeling best practices. So for this purpose, we're having a very distinguished guest, which is Ian Schnur, the Executive Director of the Financial Modeling Institute, who brings a rich experience in financial modeling. I would like to invite Ian to introduce himself.
Thank you, Mohammed. Can you hear me okay?
Yeah, we can hear you.
Excellent. Then maybe what I will do is I will go ahead and share my screen now and we will get right into today's session. So let me do this. You can see my screen okay, I guess?
Yeah, we can.
Amazing. Well, it's so great to be here. Mohammed, thanks for having me in. Really excited about the FMI is really excited about the partnership with Kaplan Middle East, and we're really excited to work with you and the rest of your team. We've known many of your colleagues for a long, long time. So before I get started here, it's nice to see everyone here in the room and who's attending. And I just would like to I want to keep it a bit of an interactive session. I'll tell you in a moment how we're going to spend our time. We have an hour in total. I'm going to share with you a few little tips to get you started on financial modeling best practices. But I would love to first know, where are you? First of all, can you hear me okay, guys? Do me a favor, just raise your thumb, raise your hand, if you can. And by the way, when you see me looking this way off to my side, I'm looking at you. I have a big screen on my right and I can see everybody in the room. Hamza, thank you, letting me know that you can hear okay. Great. Thank you. Fantastic, guys. Nice to see all of you in today's webinar. You can hear okay. Great. We're going to get started. And I'm not sure where you are. I'm going to assume that many of you are. I'm going to assume that many of you are in the Middle East, because that's where Kaplan Middle East is based. I am in Toronto, Canada. I don't know if you've been here before, but that's where I am based. And I've been to the Middle East a number of times. I was last in Dubai and in UAE in November. I had a bunch of meetings and discussions, and actually just having my morning coffee with my Abu Dhabi mug. They had run out of Dubai mugs, but the Mohammed, the Abu Dhabi is still pretty good, isn't it? That have that for today's session, I hope. So I wanted to tell you a little bit about who I am and then jump in and share with you some tips that I think you'll find really, really helpful today. So what we're going to do is, as I said, we've got about an hour. I want to spend, and I'm going to show you a couple of Excel files as well. I want to spend in today's agenda, we're going to talk for about 30 minutes about some financial modeling best practices and what financial modeling is and why it's so important and such a critical discipline. I will talk for just a few minutes about the Financial Modeling Institute, who we are, what we're doing globally. And then I'm going to turn it back to Mohammed, and he's going to tell you a little bit about the bundle. We have a bundle that we're really excited about, that we a partnership model he's going to tell you about between Financial Modeling Institute and Kaplan Middle East. And then we'll take some questions. And by the way, I love to keep these sessions really interactive. So if you have questions as I'm talking, guys, if you have questions as I'm speaking and talking to you, then just put them in the chat. Go right into the chat. Don't be shy. Type in questions, and I'll do my best to address them as we are working through the webinar here today. Okay, and all good then. So hopefully that makes sense. Let's then get started. That is going to be my plan. I'm going to jump back in and talk just to the slides for a couple of minutes. Let me go back here. And I'm going to show you my slides just for a moment as we get into the session. So, oops, it's not, my apologies. I'm going to have to keep it in. I'm not going to be able to go to a full screen, but that's okay. I'm just going to be in these slides for a moment. And I will start by telling you a little bit more about who I am and my background. You may not have heard of me before, but as I said, I'm in Toronto. I am the Executive Director of Financial Modeling Institute, and you can see my email addresses here and our website here. The Financial Modeling Institute has been around for 7 or 8 years, and we are the only financial modeling accreditation organization in the world. And our mandate is we are trying to build the world's biggest community of accredited financial modelers, and we are offering very rigorous financial modeling accreditation programs. And I'll talk about those programs a little bit later during the hour. I have been dealing with financial modeling for my entire career. I founded a company in Canada called the Marquee Group. It's a training firm. It's a training firm in financial modeling. And over the past 20 years, I've probably taught 20 or 30,000 people all over the world, bankers, students, to help them learn this great discipline of financial modeling. I just sold that company actually a couple of months ago. After 20 years, the company was sold to Training the Street, which is a very large US training business. And so now all of my time is focused on Financial Modeling Institute. I also teach a course at Queen's University on financial modeling. And so that has been my real focus for a long, long time. And I want to share with you just a few tips here in today's session. When we come back to this, I'll talk a little bit more about Financial Modeling Institute. We have a 3-level accreditation program. It is very challenging, rigorous 4-hour exams. And the reason we started FMI was because there was no way in the world, there was no way in the world for people to really prove that they had strong financial modeling skills. And so by sitting our programs and our exams, if you can achieve our exams, and the first one is the AFM, it's called the Advanced Financial Modeler. That is proof that you have exceptional financial modeling skills because you know how to build up a model in a controlled exam environment. And we'll get there when we talk more about the program later on in this webinar. So let me start by asking a question. I'm going to go back to my Excel file now here. Do me a favor with a show of hands. How many of you have built a financial model? Do me a favor, raise your hands. I want to see how many of you in the room have built a financial model before in the past in your career, right? I can see one or just a couple hands going up of people who have built a financial model. Okay, so many of you have not. So let me ask you, what I want to do is talk a little bit about it today, and I'm going to show you a financial model. In fact, here it is right now. This is a sample model called the Henderson Manufacturing Company model. This is one of our sample models that we show people. And this is what we expect people to build during one of our exams, is a model that looks like this. I'm going to talk about this in today's webinar, but many of you have not. So let me ask you this. Let me start by asking you what it is. I'd like to hear, if you have not built one before, let me ask you, when you hear the term financial model, I'd love it if can someone go into the chat? I would love it if you go into the chat, and I want to just make sure you can all, right, see it, you can. So type here. I'll put a note here in the chat. Go ahead, guys. Type right here. I'd love to know, what do you think when someone says what is a financial model, or when you think about the idea of a financial model, what does it mean to you? What do you think of? What if someone said to you, hey, what is a financial model? How would you answer that question? What would you say? What would you say? Anyone want to go? Don't be shy. Don't be shy. I'm sure all your ideas are good. I'd love to know what you're thinking about when you hear the term financial model. Anyone want to be? All right. Well, let me give you some of my thoughts here. I'm sure you have some ideas, but again, feel free to type in anytime if you like. Let me tell you very simply what it is, because it's actually pretty simple. The idea is very, very simple. What is a financial model? It's simply a forecast. That's it. All we're trying to do is build a forecast of a company, usually a company in a spreadsheet. It's usually in Excel, into the future. And by the way, for those of you who have seen a financial model in the past, how many years do you think we typically forecast? How many years into the future do people typically? Just go into the chat. If you want to type something in, I'd love to hear. Maybe that's an easier one. 5 years. Yeah, Sheikh, you're saying 5 years. That's very common, right? I agree with you, Sheikh. 5, Muhammad's saying 5. 5. Everyone's saying 5. 5 is very common. 5 is probably the most common. Has anyone else seen a different number? Has anyone ever seen a longer forecast or a shorter one? I will say 1 year. 1 year is usually what we would call a budget, right? Hamza. So usually when we're doing 1 year, that's usually like the budget for the next year. But you're right. A budget is basically a forecast. Typically, I would say 5 to 10 years is common. Okay. So 5 to 10 years is common. 5 years is very, very normal. That's all we're trying to do. All we're trying to do in modeling is build a forecast of the company's financial statements into the future. All right. And then when I say a model is we're forecasting the financial statements. And then let me ask you why. Why are we doing that? Why? So let me ask you, it sounds like an obvious question, but why do we forecast? Why are we forecasting, guys? Anyone want to type that in? Anyone want to, or what do you think? Actually, I'm going to ask you another question. Hold your thoughts for just a second. Let me tell you why, and then I want to ask you something else. Why are we forecasting? I will tell you it's because models have become easily the most important decision-making tools. Let me spell this correctly, in finance. Models have become the most important decision-making tools in finance. All sorts of decisions. Pretty much every critical decision that people ever make, any decision that people ever make in finance is based on a financial model. Do you guys know what types of purposes, what types of decisions are people using their financial models for? You want to go into the chat? What kinds of things do you need a financial model to help you make a decision about? You want to type something in? You must have some ideas, right? Sheikh, Hamza, as you guys put in some comments, very nice. So mergers, sure. So M&A. So you typed in M&A decisions, mergers and acquisitions. Should one company buy another one, merge with another company? Sure. We're using models. We're forecasting to help make decisions about mergers and acquisitions. Great. Anyone else have any reasons why we build financial models? Sure. I'll just call that, Hamza, for planning. Planning to look at actual versus a forecast, right? To compare, right? Hamza, how are we doing? How are we had a plan? How well are we doing according to our plan? Right? Someone talked about private equity. So private equity is, I'm going to put in here, valuation or investments, right? A private equity firm wants to make investments and they want to know what's the right price they should use. Profit and loss. Yeah, excellent for sure. Profit and loss accounts, LBOs. People build models to look at leverage buyouts. Can they support debt or other capital structure? By the way, guys, for those of you who are attending today's webinar, we are going to send you, you're going to receive my notes. So the notes that I'm taking on the screen, we're going to send those out to you after. So you'll get them once this is all done. Sure. And then, of course, a critical one. Yeah, I've got valuation and investment decisions, planning, M&A, LBO. Great comments. You're absolutely right. These are critical reasons why people build financial models. But the problem is that many financial models don't work well. They are a mess. Most financial models that I've ever seen don't work very well. They're a mess. They have errors. They're not clean. They're not easy to understand. And as a result, it makes it very difficult. It makes it very difficult to make really important decisions if the financial model is a mess, if it's not working well. So what I want to share with you just today is a couple of little tips, a few ideas on best practices. We're going to talk about best practices to make sure, to ensure your model is working well, to make sure that your model is working well, that it's powerful and it can be used to make critical financial decisions. And so what I want to show you then is this, and you can see here, I have a sheet. I've got a sheet here in my Excel file on financial modeling best practices. There's a list of them here. They are also in the slides. So we will also be sending you the slides when this webinar is over. And here is a slide that's got that has, you'll see it here, financial modeling. It's slide number 13. Slide 13, you can see it after, is financial modeling best practices here. So these are the things, and by the way, when we talk about the FMI, or building financial models, what we are trying to set out to do at the FMI is make sure that people have the skills to build a world-class financial model. And I'll just jot that down. At FMI, we want to ensure people, that's what we're trying to do, have the skills to build world-class models that work. And if they work well, they will allow you to make these critical decisions. And that is what we are trying to do that. And we do that by offering very challenging exams. And if you can pass the exams, then it's clear that you have the skills that employers want. Just had a quick question, just by a show of hands. Has anybody ever seen, I'm looking at you now again, guys. Has anybody ever seen have you ever applied for a job, or have you ever heard of a job and right on the job posting, it said, we are looking to hire somebody who has strong financial modeling skills? Have you ever seen that? Have you ever heard of that? Where Sheikh, you've seen that, where, Hamza, a few of you have, where the recruiter, the company says, we want to hire people who have strong modeling skills. That's pretty new. That's relatively new in the last few years. A number of organizations are saying that. And so the only way to prove it is to be able to demonstrate, through a challenging exam, I believe that you've got the skills. As an example, PwC, I've got some close colleagues that work at PwC in Dubai. You might know, maybe you don't, maybe you do. PwC in the Middle East, if you want to work on one of their deals teams, if you want to join a deals team at PwC, you need to achieve our level 1 exam is our AFM Advanced Financial Modeler, because to them, that proves to PwC that you have the strong modeling skills that they are looking for on their teams. So let's talk about some of the critical skills and what we will cover, because again, I've only got about another 20 minutes and then I'm going to give it back to Mohammed, and I will see if you have any questions as well. But if you take a look at and these are things, by the way, for people that join this program offered by Kaplan and the FMI, you will have all sorts of classroom training offered by Kaplan. Kaplan is going to offer the live classroom training, and then the FMI provides some self-study learning materials along with the exam. And these are all things that you will learn about. These are all the critical concepts that you will learn about during your journey to become an excellent financial modeler. And that is, first of all, about planning. Planning a model is so important. It is so critical to make sure a model is well planned and well designed. Half the job, what I will tell you is this. You all probably know that when you build a model, we build it in spreadsheets. But I want to have a question for you. I've got a question for you as well. How much, when you're building a model, right? Let me just put a note here, model, planning, and design. I've got a question for you. What do you think, guys? When you are building a forecast model, what percentage of your time is actually working in Excel? What do you think? If we have to build, let's pretend that we were working together to build a financial model for any company that you chose. We were working on building a forecast. What percentage of your time do you think, if you're doing a good job, what percentage of your time are you actually working in Excel, typing and building the spreadsheet? Because I'll tell you, it's usually less than people sometimes think. I would say it should be approximately 50%. Only 50% of your time should be actually working in Excel, building in the spreadsheet. What's the rest? The rest, I'll put in here, the rest should be planning, thinking, asking questions, doing research, presenting the model, communicating the model. And during the program that you do with Kaplan and FMI, you learn about all of that and how we go through planning and the discipline about building a powerful financial model. And so it is so critical to be able to properly plan a model. And I will say when a model is well planned, it can be communicated. It can be communicated. And it's so critical to make sure that you can properly communicate and share your ideas with people. That's often a huge problem. I will say the number one reason models fail is due to poor design. The number one reason models don't work well is because they're not well designed and they're not well planned. And so during the modules, during the program, we go through all of the key parts about having a well-designed model. Let me show you a model now, by the way. Let me show you the model again. Here is the Henderson manufacturing model. And I'm going to show you something and then move into another tip. I'm going to show you one or two great Excel skills here. I'm going to show you a couple of really powerful Excel tips as well that I think you are really going to like, okay? So in this particular file, you can see here the Henderson manufacturing model. There is there's a cover sheet. You can see that there's a nice cover sheet. There is a summary. When you build a plan, you have to think about what should be on the executive summary. So a good model should always have an executive summary so you can communicate the critical results of the model. And they are here up front on a sheet called summary. This is the first thing that my reader will look at. Next is a page where it has all of the assumptions. All of the model's inputs and assumptions are here. I'm going to show you a really great Excel tip in just a moment, so stay tuned on this. All of the model's inputs and assumptions, you can see this, are up front. And by the way, one of my top 10 modeling tips is that you should keep all of your assumptions up front. It's very, very important, very powerful to have all the assumptions up front in a good model. And I will talk about that in just a moment. And you can see here, all the inputs and assumptions of the model are here. Next, there is a scenario page. I'm going to show this to you very quickly in the webinar, a scenario page. And then the model itself. The model itself is on the last tab. And watch this, guys, when I roll down the model. When I go through the model itself, there's a forecast, right? It's a 5-year forecast from 2023 to 2027. There is a revenue forecast. There's a revenue forecast. And underneath it, I have a cost forecast. A cost forecast. Underneath the cost forecast is an income statement. Here is the company's income statement. Underneath the income statement is the cash flow statement. Okay. And then under it is the balance sheet. You get the idea. This follows IFRS accounting rules. So this will be all very familiar to you. All the financial statements are here vertically. Now, you're noticing that I chose to build vertical. And one of the tips that I'm going to share with you is there's a tip here that says build the financial statements vertically. Now, you don't need to, but we need to think as well about planning. And during the planning, we have to think about, during planning, you need to think about tab structure, right? What should be on each tab? I actually have a question for you. Has anybody ever seen a financial model? Has anybody here opened up an Excel file? Raise your hands. Have you ever opened up an Excel file and seen the Excel file had a huge number of sheets, 20, 30, 40 different Excel sheets? Raise your hand if you have ever seen an Excel file that had 20, 30, 40 different sheets all across the bottom. Let me see if you've seen that. Yeah, Muhammad, you've seen that. Ali, you've seen that before. It's not wrong to do that. It's not wrong, right? I see a number of hands going up. It's not wrong, but it's not optimal. And so we need to think during the planning, we need to think about tab structure. What's the optimal tab structure within the model? And I will talk about it. There's two approaches, right? There are two approaches. There is horizontal and vertical. There are two approaches to modeling horizontal and vertical tab structures, and I will talk about that in my next tip. But I want to come back to a tip I shared with you a moment ago. I said that when we build a good financial model, it's really important, it's very, very critical to keep the assumptions up front. And I'll put a note, keep the assumptions up front. Keep the assumptions up front in a model. Has anybody ever, raise your hands again, has anyone here ever seen an Excel spreadsheet that did not have an assumption? You see, does everyone see, you guys see, I have an assumption tab, an assumption sheet, and all of the assumptions are here. Look, I have an assumption for product pricing, and they're nicely designed in boxes. I have a box on some of the equity assumptions and a box on the income tax assumptions and interest rate assumptions. You can see that. And the operating costs for the company, all of them. Here's my depreciation assumptions. All of the assumptions have been explained nicely up front. Has anyone ever seen an Excel spreadsheet that did not? Let me look at you. Have you ever seen a file that did not list all the assumptions and the assumptions were just scattered? Have you ever seen an Excel file where the input cells were scattered everywhere, all over the file? Everywhere you go, up and down, there were different inputs. Have you seen that before? Maybe you have, maybe you haven't. Yes, Muhammad says seen that. What's the problem with that then, Muhammad? What's the problem? What is the problem if you have an Excel spreadsheet and all of your assumptions, all the inputs are scattered in 100 places everywhere on every sheet? What's the problem with that? That's a huge, huge problem in models when people build their models that way. What's the issue with that? Keep the assumptions up front. I will say here, why? Why do we want to keep them all up front? The first thing your reader or your client, I'll put, or your client wants to know is, what's the answer? And then how did you get there? What assumptions did you use? The reader, the client always wants to know what inputs and assumptions did you use to build your forecast. And so it's very, very critical to show them all up front. And during the planning discussions, we learn and you learn how to set up the assumptions and build them just like this. Now you're going to get this file sent to you, but it's really important to do this well. Now, on that note, let me show you a really powerful Excel tip while we're at it. Again, I want to show you a really powerful tip and a really powerful tool that I think you'll find helpful. Let me put here a note that says, sometimes people don't like to have all the assumptions up front because they want to see how the assumptions are changing the answers. I'm going to show you something now. Let me show you what I'm talking about. Do you notice that I have all my assumptions up front? The cost assumptions are right here. And can you see that there's a raw material cost and it's $226 per unit? That's the raw material cost here, $226 per unit. What if you found out that that cost was no longer $226, but your boss told you that costs were rising and it was higher than, and the raw material cost is actually going to be $250. Not $226. Okay. So look what I just did. I changed the raw material cost to $250. I increased it. What's going to happen to the company's profit now? What should happen to the profit now on the income statement? But well, obviously, because I'm building a model, this should be linked. So this cost number should be impacting what's happening on the income statement. Let's go see the income statement down here. So what did that do? What did that do to the net income of the company, to the EBITDA? What do you think that did? Obviously, if I increase the cost, if I increase the cost of this company, the profit went down, right? But I don't know how much it went down. I can't see how much the numbers went down. I can't see it because they're on different sheets. So let me go back. Let me go back and make it 226. Okay, let's watch this. When the raw material cost was 226, look at this. My EBITDA was 73, 47, 86. The net income was 30, 13, and then 39. Okay, well, if I go back, let me go back to the assumptions and make it again 250. I'll go make it 250. I raised the raw material cost. And now when I go back here, I have to jump back and forth. I'm always jumping back and forth, back and forth. And now I can see the EBITDA went down and the net income went down. but it's a bit of a hassle. It's a bit of a pain. It's a bit of a frustration to always have to change your assumption and then go back to the model to see what's that doing to my numbers. I want to change another assumption. I'm going to change a number here, and then I have to go back to the model to see what that's doing to my results, to the income statement. So as a result, I want to show you a very, very powerful tool. Here's a powerful tool in Excel to change an assumption and to see the results. And it's called Excel's watch window tool. It's called the watch window. And where does it live? It lives here under the formulas menu. Do you see this formulas watch window? But I don't want to use my mouse to go there. You can use your mouse, or you can press the Alt key and then the letter M. The letter M lights up, and then the letter W. So it is Alt M, and then W is going to activate the watch window. Watch this, guys. So let's pretend I want to go back here again. Let me go back to make this 226. I'll go back the way it was. I'm going to open up the formula watch window and put it on my screen. Do you see that? I'll make it a little bit bigger. This powerful tool allows you, when you build models, to say, okay, it allows you to say, what is the answer if I change one of my assumptions? So let me click this. Look at this button, guys. It says add watch. I'm going to add a watch. It says where? What do you want to watch? Let me go to my model. And I'm going to say, let me say here, let's watch the first 3 years. Let's watch the first 3 years of EBITDA. That's my EBITDA row. I'll click add. And now let me do another one. Let me now click add watch, and let's go to the model. And I'd like to add the first 3 years of net income. Okay, do you see that? I added 3 years of EBITDA and 3 years of net income. I will click add. Very simple. So now look at this. It's very powerful because now I can see right on this assumption sheet, I can see my EBITDA. Here's 3 years of EBITDA, and here is the net income. But this is a really amazing tool because, of course, if you change a raw material cost and I make it higher, watch carefully, please, in my box when I press enter. When I click OK, all the numbers change. So as I change something up front in the model, I can immediately see what's happening later on in the back, on the back end below. And so this is a really great tool that people can use. And I wanted you to see that. Who's going to try this tool? I want you to use this in all your Excel files because it's a great way to see what's happening in your files. Raise your hands if you'll try this. I'd like to know if you're going to try this feature, because I think if you do, you'll find it a very, very powerful, effective tool to allow you to work very effectively and to allow you to make changes up front, but see later on what's that's going to do in your file. Okay, so that's one thing to play with and to try. Right, a couple of you have raised your hands. Excellent. Let's talk about another tip here. I want to show you another tip. We've got about 10 minutes, and then I'm going to turn it back to Mohammed here. So that's Excel's watch window. Keep that one in mind. Another model best practice that I talked about is here. We talked about, by the way, keeping the assumptions up front. We talked about making the data inputs blue. And let me just touch on that for a second. Do you notice that on my assumption page, if you look at the assumption page, all of the input cells are blue. In a financial model, it's really important to make sure that your input cells are one color. We usually make them blue, and your output cells are a different color. So my inputs are blue, and you'll notice here the actual formulas are black. The formulas we make black. So let me put a note here on that. So a very important model convention is to make input cells should be blue, and formula cells should be black. All right, that's a very common convention. I'm going to make the cell blue here. Oh, that was red. Make it blue here. Input cells should be blue. Formula cells should be black. Why, by the way? Why do we do this? Why is it so important? So that it's obvious which are the assumptions. It's obvious which cells are the assumption cells. You always want to make sure that your input cells are blue, formulas are black. By the way, look what I'm going to do, guys. I've got a number here. I'm going to type in a number, 546. Look what I can do. I can make it blue. Look at how simple that was. I can make it red. I can make it yellow. I have some because it is so common to be able to it's a very, very common skill to be where you need to be able to make your numbers a different color. I don't have time to show that to you right now, but if you check my LinkedIn page, I created a video on this, and you're welcome to follow me. I often post videos through my LinkedIn page. You're welcome to do that. If you want to know how to do that, if you want to know how to make a number red or blue instantly, very, very quickly, you notice I did not touch my mouse on the buttons here. You can just take a look at my LinkedIn page, and you can scroll down my posts, and you'll see there a great video that got a lot of interest. And that's something you can learn after this webinar is over, if you like. Now, the next thing I want to show you here is a really powerful tip is I've got a tip here that says build the financial statements vertically. And they don't have to build vertically. You don't need to build vertically. But look what I did, guys. Look what I did. I told you that when you build a financial model, that there are two approaches. There are two approaches to planning, two approaches to model design, horizontal and vertical. A vertical model means that all of your sections are stacked on top of each other, right? A vertical model means this. It means you have revenues, and then you have costs, and then you have an income statement, and underneath it, you have a cash flow statement, and underneath the cash flow statement, you have a balance sheet, okay? This is a vertical model. A horizontal model means you have a lot more tabs. So a horizontal model means you might do this. You might have a sheet called the income statement like this, and then you might have another sheet here called the cash flow statement, and then you might have another sheet called the balance sheet, right? Has anyone seen that? Raise your hands, guys, if anyone has ever seen a forecast, and in the forecast, you had an income statement sheet and a cash flow statement, then tab, and then you had a tab for the balance sheet, right? A bunch of you are raising your hands. You have seen that before. It's not wrong. Let me be very clear. It's okay. It's not wrong to do that. It's not wrong. But people make more mistakes. And let me just add that note. In my experience, let me put a note here. Both approaches are okay, and both are used globally. And by the way, on the FMI's AFM exam, if any of you wants to become a candidate and write the AFM exam, either option is okay because they're both commonly used. But what I want you to see is with a vertical model, watch this. With a vertical model, you're going to make less mistakes, I believe, because look, on an income statement, it starts with revenue, and the income statement ends with net income, right? You all know that the income statement ends with net income. Well, on a cash flow statement, what's the very first line? What's the very first line on a cash flow statement, guys? You all know this. The very first line on the cash flow statement is net income, because you start with net income and add back the accruals, right? Net income, exactly, right? Actually, Hamza, most income statements, the most cash flow statements, it would be the profit after tax, the true net income. But look, what I want you to see is, where does it come from? Look at this. When you build vertically, it stays in a nice line. Look, the net income, right? The net income, look at this though. This is what I want you to see. When you stay vertical, you have your profit on the income statement. And then on the cash flow statement, it's so easy to link it. It's easy to build it. It's linear, and you're not going to make a mistake because it's right on top. It's like a waterfall. It's rolling down the page. How about my depreciation? Well, depreciation is adding back, right? I'm linking it. I'm adding it back from the income statement. So where's it coming from? Straight above me. It's easy to link. It's easy to build. It's easy to audit, easy to check. You're not going to make a mistake. So very powerful. And then, but what about this, guys? On a cash flow statement, what's the very, very last line? Usually the last line is ending cash. The last line on a cash flow statement is ending cash. Well, what's the first line on a balance sheet? The first line on a balance sheet is the ending cash. So where does it come from? It comes once again from right above. Very clean, very simple, easy to check, easy to audit. So the nice thing about building vertically is it allows you to kind of build in a waterfall fashion in a very modular way and minimize errors because everything stays in the same column and the same sheet. So you're not going to make many mistakes. And so that's kind of why I want to keep in mind. However, the last tip that I want to show you, tip on navigating a model. And what I want you to see is this: a vertical model can get very long, right? A vertical model can get very long because I have all my pieces on top of each other. It can become hundreds and hundreds of rows long. So we have a great tip to help you navigate, and it is called the Alt-VV navigation tool. It's one of my favorite tips in Excel. It's called the Alt-VV navigation tool to allow you to navigate your models really effectively. Because again, I'm talking about if you're going to build vertically, then how do you make sure you can find things? Well, watch this. I'm going to do this, and then I'm going to turn it back over to you, Mohammed. We're just about done here in the next couple of minutes. Is this, all right? So take a look, guys. I'm going to go to the very top. I'm going to go to the very, very top of my screen. I'm going to put my cursor on the revenue schedule, and I'm going to press Alt-VV. And that opens up the custom views menu. And actually, that's what it is. It's the custom views. It's the custom views tool. So Alt-VV is the custom views tool. Watch this. I'm going to go one more time, Alt-VV, and it opens up the custom views button. I'm going to click add. I'm going to say, let's add a view. And I'm going to type in one. I'm going to say revenue schedule. Do you see what I just did? I typed in one revenue schedule, and I'm going to click OK. Done. That's it. That one's finished. Let me go down now, and I will go to the cost schedule. I will put my cursor on the cost schedule and press Alt-VV again, and I will say add again, and I will say to cost schedule and click OK here. Let me do one more for you. Let me do one more. I will go to my income statement. I'll put my cursor at the very top and press Alt-VV. And you notice the first two are already there. Let's add one more. And I will say 3 income statement. I will type in 3 income statement and click OK. It's so important when you want to have a best practice. I'm talking about modeling best practices today, and there's only a couple that I was showing you. But one thing around modeling best practices is around thinking about optimal tab structure. If you design a model vertically, you need to be able to move around very quickly. Well, watch this. Let's pretend I was way down here at the very bottom in row 350, and I want to quickly go see my income statement. What can I do now to go see my income statement? I don't have to roll, and I don't have to just press up, up, up. I can press Alt-VV. I've got my custom views. I'll go down to income statement and press enter, and watch this. Boom. It takes me right there. Instantly takes me right where I want to go. And even if I was up front, let's pretend I was on the cover and I pressed Alt-VV and I said, I want to go to the revenue schedule, and I pressed enter. It takes me right there. So it's a really all Excel spreadsheets, guys. Every Excel spreadsheet you ever build can benefit from this technique, this feature, because it allows you to design, to build, and then to navigate and to move around. So I'm going to wrap up my comments. I'm going to turn it back to Mohammed. He wants to talk to you a little bit about the program that we're offering. And then I'm going to spend a few last minutes talking about the FMI and show you a little bit more about what we're doing and why, hopefully how it can help you. And then from there, if there's questions, we'll take any questions. Okay. But I just want to wrap this up. If you join our program, if you join our community, we'd love to have you in. You will become an expert at knowing how to plan and design a model. You will become an expert at knowing how to build an assumption page, how to build a scenarios page. I didn't show that to you today, but one of the most important pages in any model is a scenarios page, and it's so important to know how to build it. A scenario page allows you to manage uncertainty, to manage volatility, to manage risk. And you need to know how to build this up. And this all gets covered in the program. We talked today about building your financial statements, vertical, horizontal, and then a bunch of additional tips as well. You're going to get all these files and you can look at them on your own. But I hope I left you with a couple ideas on food for thought about what it is that we're trying to do in modeling. It's to build a world-class tool to allow you to make powerful, effective, accurate decisions. And I also left you with a couple of really nice Excel skills that modelers love: watch window, Alt-VV to navigate. And I hope you use those right away. Hope we see some of you in our community. I'm going to turn it back over to you, then Muhammad, and to talk a little bit about Kaplan FMI, and then I'll talk a little bit about the FMI exam and our programming once you are done.
Well, thank you so much, Ian, for the amazing tips and advices you have shared with us, which I'm pretty sure will add a lot of value to anyone who's doing financial modeling. So guys, let me just share my screen. Okay, perfect. So guys, let me walk you through some of the Kaplan offerings when it comes to the financial modeling trainings. So firstly, this AFM program, it will help you to prepare for the Advanced Financial Modeler exam, which is the first of the 3 certification levels offered by the FMI, the Financial Modeling Institute. But what's really interesting about taking these financial modeling programs with Kaplan is, guys, you can see it in bold in the middle, the bundle, the special AFM exam discount, which you will get as a Kaplan student if you will do these financial modeling trainings and preparations with Kaplan. So let's talk a bit about the program features. Firstly, the duration of the programs. It varies from like 2 to 8 days for each program. We're having different packages which will suit each candidate with a different level of financial modeling knowledge, which I'll be introducing to you in a couple of minutes, alongside with the flexible learning through online and on-demand programs. And there will be a motivation here, which is a Kaplan certification after every program that you complete, alongside with the FMI certification after the attempting of the AFM exam and passing the exam itself. In addition to this, you will always get the continuous support from the trainer or the expert via WhatsApp, because you will get the trainer support like on a 24/7 to clear any doubt that could come to you, after finishing the class or the training or the preparation. Alongside this, you will get an access to the class recordings and with plenty of Excel exercises. Guys, the same as what Ian mentioned earlier, it's very important to have Excel skills to build financial models. So in addition to the class recordings that you will get through our Kaplan LMS portal, you will get plenty of Excel exercises to improve your skills in Excel. As you can see in front of you guys, this is the ideal bundle, or let's call it the ideal package for anyone with minimal financial modeling knowledge. So as you can see, it starts with Excel Analytics on-demand self-study course, followed by Introduction to Financial Modeling, which is a 2 days live online course, followed by the 3-statement modeling program, which is going to be 3 days live online. And the last thing is the AFM Bootcamp, or the Advanced Financial Modeler program, which is as well 3 days live online. So this is the ideal package for anyone with minimal knowledge of financial modeling. But in addition to this, we're having plenty of other packages. It varies and it depends on the level of knowledge you're having. So if you take a look on these different packages in front of you, the one on the top, which has the 8 days, it's the one that I just showed you for anyone who's having minimal knowledge of financial modeling. If you're having, like, let's say, intermediate level of knowledge when it comes to financial modeling, you can just take the option 2, which has an online self-study Excel course, followed by 2 live online courses, the 3-statement modeling value and valuation, and the AFM bootcamp. So the one excluded here is the Introduction to Financial Modeling, given that you have an intermediate level of knowledge. And if you are having, let's say, some sort of advanced financial modeling knowledge, you can just take option 3, which has 2 online self-study courses, the Excel one, the 3-statement modeling and valuation, and the live online course is the AFM bootcamp. And if you are only interested about getting just an introduction to modeling or to financial modeling, you have the option number 4, which is a total of 2 days, which has only the Excel Analytics course, which is the online self-study course, followed by an Introduction to Financial Modeling, which is a live online course. This is only for someone who would like to get an exposure, like you would like to have a quite small idea about financial modeling. So let's take a look on the training calendar. Let's say that you guys are enrolling with Kaplan to do these financial modeling courses. The upcoming Introduction to Financial Modeling course, which is a live online classroom, will take place on 3rd and 4th of June, which is 2 days, followed by 3 days of 3-statement modeling and valuation, the live online course, which will take place on 17th, 18th, and 24th, followed by the AFM Bootcamp, which is a live online classroom, which is the 3 days course. It will take place on 1st and 2nd of July. And on 8th, you will have a special day, only conducting and doing an exam, a mock exam, and getting feedback from the expert or the financial modeler or the trainer. Because the upcoming AFM exam date is going to be the 29th of July. Okay, so these are the packages that we are offering for you guys. In case of any extra questions regarding the fees or any other extra details, which package, let's say, is suitable more you, given the level of financial modeling you have, you guys will see in front of you, these are the contact details of our program advisor, Dima. She'll be more than happy to give you any extra details you might need, or maybe you can type in the chat any questions that you would like to know more about the course, and our program advisors will be in touch with you guys. And now I leave it one more time to you, Ian.
Okay, fantastic. Thank you. Fantastic. Thank you for that. And let me go back and share my screen one more time. Guys, I hope you, again, this short webinar today, I hope you found it helpful and got some of the tips. It was recorded. Today's session was recorded, and I believe the link is going to be sent out to you by Kaplan. Yes, so it looks like as I said, those of you who've attended today you're going to receive my slides, you'll receive my notes and the financial model. And so you'll have all of that. And, we're excited, as I said, about this partnership with Kaplan, because Kaplan is delivering the training, the live support. And at FMI, we are offering the global accreditation. And you're going to start seeing FMI a lot more. We have some very exciting partnerships, like with Kaplan, also with some huge accounting accreditation bodies in the world, with CFA Institute. The former CEO of CFA Institute, Paul Smith, is on our board, on our team, recognizing the need of financial modeling. So I think you're going to see us a lot more, because so many employers around the world want to know that people have excellent modeling skills. Let me just talk for a minute. And by the way, if anyone has any questions, if you have any modeling questions for me, I'm more than happy to discuss some modeling questions. Type them into the chat. If you would like to discuss modeling, and that's why we're here, why don't you just go into the, I have the chat open. If you have any modeling questions or things that you've been wondering about, toss them into the chat, and I can talk about them for the next few minutes. And I'm happy to stay a few minutes late as well. But just quickly to let you know about the level 1 AFM exam. During the AFM exam, here's what you need to do. It's very, very simple. I'll write this down. The AFM exam, our level 1 AFM exam, the premise, the idea is very simple, right? We give you a case study about a company. We give you a case study on the, we give you on the exam, we give you 3 years of historical financial statements. We give you a case study, and we give you 3 years of financial statements, and that's it. And then you must build a model of the company in under 4 hours. And you need to build a model that feels like this. It looks and feels like this level of detail. You can build horizontal, you can build vertical, but you basically need to create something like this in under, I'm going to delete these ones again. Remember, you don't need this. You don't need this one, but you need to create a financial model that kind of looks and feels like this level of detail in under 4 hours. And if you can do that, you get awarded the AFM designation, and you get a beautiful badge, and you can put the badge on your LinkedIn. You go into our candidate directory. And just so you know as well, the FMI's learning materials include self-study materials that were created by me and the rest of my team. So you get to spend a lot of time with me in videos going through the FMI's learning materials. Self-study, which complements very nicely with the Kaplan live instruction that you're going to get from Kaplan Professional Middle East. And so that's kind of what this is all about, and hope that some of you want to join us. Oh, the last thing I should mention is you get to join our community as well, a community of financial modelers all over the world continuously learning and improving their modeling skills. I've got some questions. Shakes says, how long does it take to make an efficient model? So Shakes asked a question, how long does it take to make an efficient model? That is, it depends. And I can't give you one simple answer because it depends on the level of detail that is needed. To build a model like this level of detail, Shake, with this level of detail, on the exam, people can do it in under 4 hours. People do it in 3 hours, 2.5, 3.5, or 4 hours. People can build, but we give you all the assumptions on the exam. So the actual building time in Excel is, 3-4 hours. In real life, if your question is about in real life, well, as I talked about earlier, half of the battle, half of the time that you spend is trying to figure out what's the appropriate level of detail, and you're planning and you're asking questions and you're trying to figure out what are the appropriate cost items, and you're doing research. So just that part, doing the research and planning, can easily take 4 hours, 8 hours more. Once you have all the data you need, if you need a model with this level of detail, yeah, you can do it in 3, 4, 5 hours. But as models get more and more detailed and have more sections, then it can take longer and longer. Can take a couple days. I have built models that took days and days and days, because they had huge amounts of detail, and there was lots of discussions with the client. Every day there was discussions with the clients, and then they wanted changes, and becomes a very iterative process. But on the exam, a model like this can be done in 4 hours. The community, sure. So God has said, talk about the community. The community, we have a, I wonder if I can even show it just very, very quickly. I think you're seeing my screen here. I'll just go into a new tab for a second here. I wonder if I can. So those who join the FMI become members of our community. And we have hundreds and hundreds, thousands of people in this community. The FMI's learning materials live in here. We are always offering events. In fact, let me show you here. We actually have an event starting right now. We have an event starting right now on blockchain and financial modeling. And where is it here? I don't see it, but we are constantly running events for our, and then we put up the recordings. Once we do events, we show the recordings of, we've had webinars on soft skills, on presentation skills. We've done webinars on data science, introduction to Power BI. We did an introduction to Python. We are trying to deliver value to our members, to the FMI community, and you get all of this when you become a member of the community. Here's events. Here's the one today. Today's event is on what financial modeling contributes to the blockchain. It's starting right now, and there's a lot of people. You can see 63 people have RSVP'd to that. So that's what happens in the community. You get to meet financial modelers all over the world. Last question, Sapna said, will the course also provide various industry-specific knowledge? Now, that's a great question. Through the FMI learning materials do not. We talk a little bit in the learning materials about different industries, but the reality is, I will tell you, Sapna, the reality is, the biggest difference between modeling different industries, modeling mining company versus an oil and gas company versus a real estate company, the biggest difference, really the only difference about modeling companies in different industries is how do you model the revenues and the costs. That's really the fundamental difference between industries, is how does the revenue work and how does the cost work? Everything else is the same. The way you build the income statement is the same. The way you build the cash flow is the same. The way you build your depreciation is the same, basically. The way you build income taxes, the way you do working capital, that does not change industry by industry. So we usually leave it to people when they work in an industry to learn about the industry-specific knowledge. At FMI, we want people to learn the broad global discipline around modeling. And then I promise you can apply it to any. I have built models personally for companies in, 20, 30 different industries. And you learn a bit about a new industry every time, but the fundamental ideas are really stay the same. Now, it's possible in the live training, when you do the live training with Mohammed at Kaplan, that they will talk about, they might talk about their experience in different industries and can help you with those issues. But that's the fundamental difference. Okay. So that's learn. Last question. At which stage will we learn the dynamic models? Not sure I understand the question, Hamza. This entire model is dynamic. I'm not sure if you have a specific meaning by that, the dynamic models, but what we mean by a dynamic model is a model where if you change something up front, it flows through. When you change an interest rate, if I change my interest rate and I make it 12%, that's going to impact it's going to impact my debt schedule, and it's going to change the cost of debt, and the cost of debt is going to go up and change my income statement. That's dynamic. And it's going to then roll down to the cash flow statement. Then it's going to roll into the balance sheet, and it's going to impact the cash. So dynamic just means everything's connected and talking. And during the learning materials, we show you how to build all of that piece by piece so that it's connected and dynamic. Okay. Right. Got it. Excellent. Good. And you'll learn that in the live stuff with Kaplan, and then with me in the FMI self-study videos. Okay. Super. Guys, you got some great questions. Feel free to reach out to us, to Kaplan. We hope that you want to continue on your financial modeling journey. We'd love to help you. I'll let you know the next time I'm back in the Middle East, in the region. Try to get back to Dubai once in a while. We're working with schools and organizations in the region. It's a very exciting place. And I hope to meet some of you at some point as well. So, Mohammed, I'll turn it back to you. I want to thank you for having me in today. We're excited about our partnership with Kaplan and to continue on this journey here.
Thank you so much, Ian, for your time. And thank you, everyone, ladies and gentlemen, for attending the webinar. Yeah, that was amazing. So I hope to see you guys in the upcoming webinars. And I would like to wish you all the best of luck. And thank you so much, everyone. And have a brilliant and great day.